Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back once again to the Fintech Times News and Views podcast. It feels like it's been ages since we've done one of these, but Francis, Tom, nice to see you again and nice to chat about fintech with you. How are you guys doing?
Fantastic. It's good to be back. As you said, it feels like it's been forever since we last all sat down together, at least, and had a nice chat. So glad to have everyone back around the table again.
Absolutely. And Francis, how are you this week?
Yeah, I'm well. I think it feels like it's been forever because it has been forever. It's almost been a month, I think, since we last did one of these. Polly, you were on your honeymoon. That's pretty massive,
did
right?
get married, yes. Things have happened since we last did this podcast.
Things have indeed happened. So I mean, yeah, there's a lot of stuff that's gone on, but no, I'm happy to be back and talking fintech with you guys.
Awesome. And what a day to be talking about fintech. But what are you guys going to be chatting about today? Tom, what is your article?
Today, I'm going to be taking a bit of a risk because I'm heading to Wales to talk about a recent roundtable discussion, which is hosted by GoHenry, about the importance of financial education for children and teens in the UK, and basically what the roundtable had to say about the lack of financial education currently in the curriculum. I'm looking forward to getting some Welsh pronunciations in there.
I was going to say, I feel like that's bold, Tom, as I am the token Welsh journalist in this podcast.
That's why I said I'm taking a risk, but I know, I'm hoping it'll pay off.
Not sure about that. But Francis, what about you? What's your news story this week?
So I think I'm going to be playing it a little bit more safe compared to Tom, in the sense that I'm going to be talking about the Hong Kong Monetary Authority's new rules, basically, for crypto organizations and their use of banking terminology, and that it is in fact breaking the rules.
Good stuff. And then this week, I am going to be looking at UK banks and how they are inherently misaligned with customer needs as interest rates for savings remain stagnant, which is a heck of a title, Tom. So well done on that one. But anyway, you know what, Tom, you can go first because let's get into Wales, my home country, my life.
We're taking you back home. So basically, the article is all about, as I said, a recent roundtable which was held by GoHenry to judge the importance of addressing financial education in the UK. And basically, at Welsh Parliament, they found that cross-party members of the Senedd, I believe, are united in supporting the introduction of better financial education for young people across the UK. And this is important because I did a little bit of research and found like recent reports, one from the Money and Pension Service, which revealed that only 47% of children in the UK receive a meaningful financial education either at home or at school, meaning that millions are left without vital financial knowledge when they grow up. And it means around 5.4 million children do not currently possess the money skills that they'll need when they go into adulthood. And meanwhile, GoHenry research revealed that adults who have been financially educated in their younger years, they're much more likely to be in higher paying jobs and therefore could contribute an extra £202 billion to the economy by 2050 if basically everyone is able to receive a good level of financial education. So this would mean that on average, people would be £70,000 richer when they come to retirement. And, financial education could also result in the formation of 76,400 more businesses every year. So I just thought it was a really interesting topic that, we're all very aware of the importance of financial education, but there actually isn't much when you look at the curriculum. I certainly was never sat down in school and taught things about savings accounts or how to sort of organize my money. And it's always been a bit of a debate whether there should be more about that in the UK schools. So I just wanted to get your take on, should we be receiving more financial education in our younger years in the UK? And what more can schools and the government be doing to really sort of emphasize this and to push financial education forward? So Polly, I'll come to you first, seeing as we're in Wales.
I just want to start by saying excellent pronunciation.
That's
on Senedd there. You got the double D, so I'm really proud of you. So well done. I think so. Not to be like I thought of this before it was cool, but I've been saying this for years. When I ran for head girl in year 11, or whenever I ran for head girl in my secondary school, one of my like campaign points was that we should start having what I think I called him like money lessons or something really lame. And like this was my whole campaign was organized about how we should be taught how to use money and like what a mortgage is and what taxes are, and all that thing. And that was like my big thing. And I didn't get elected head girl, and they weren't ready for such a visionary that now 10 years later clearly is what everyone else is thinking about. So I thought about it before it was cool. But I absolutely agree with everything that you've just said. I think financial education, we harp on about it like there's no tomorrow on this podcast and at the Fintech Times, to the point where we do repeat ourselves quite a lot. But it is so important. And I think to have, a country like the UK, who are, we like to think of ourselves as pretty highly advanced when it comes to like the economy and other things like that, and yet we still don't have financial education in schools. We're still not teaching it at the younger level, so that when people enter society, they have an understanding about money. Like that's still not happening. And I think that is a problem. And like it was saying in the piece, in the news story, and for this round table, it has so many benefits when you start that education early. There isn't really any negatives. Like, how can having more knowledge and more education around money be a negative? That there aren't any. So I do think it's really important that we start getting financial education within schools. I think, the earlier the better. And it's one of the reasons why I really like Go Henry as a company. I think their sort of overall goals, and priorities to like teach kids how to manage their money through obviously like their bank accounts and other products, but like their general um company aims, I think, are really fantastic and should be shouted about more, because we do need to teach kids how to learn money, especially in this day and age where money is a huge thing, right? You can't escape it. And now with all the different cost of living crises and the economy and all the other horrible things that you hear on the news, it's so important. And to have children who then become teenagers, who then become young adults, who then become adults, not understanding the very basics around finances, and even just having like basic money skills of like how to set a budget, how to keep to the budget, how to use credit cards properly so you don't end up in mountains and mountains of debt. Even just little things like that is just so important. So I love that the Senate have done this little roundtable. I hope they do more, and I hope that it actually becomes a thing. I hope that people who are more important than me and higher up in the government actually go, oh yeah, this is a thing we should be doing, and get it in schools, and get it in schools as soon as possible, because it really is important.
Yeah, exactly. And I think that's the one thing you touched on. This is the thing that I always speak about a lot on this podcast. I feel like is just a frustration with how slow things move in, whether it be the UK government or other governments. And this is something, you were campaigning for in year 11, and yet in today's day and age when we're so aware of the importance of this kind of thing, and it doesn't seem like it's not a reason like, oh, we can't afford to introduce financial education because, well, at least thinking about it now, I can't think of a reason why they couldn't just add it to the curriculum. It'd be something that existing teachers teach. It's not something, there's not too many barriers in the way to introduce this kind of thing into schools. So I think that's the frustration for me, is how slow things move to get this kind of thing in, when really, had it been in part of the education 20 years ago, that's at the very least when it should have been in. So why are we talking about it now in 2023? We're still talking about, oh, we should be given financial education. But Francis, I want to hear your take on this too.
Yeah, I think everything you both said is really important and extremely valid. And for once, I think we're all going to be on the same side here. I'm not going to be saying it was a bad idea for some weird reason, but I think the main, I guess, analogy I suppose I wanted to make is, I can't remember what the classes were called. When I was in primary school, we had these sort of like internet safety classes, right? I want to say it was like PGSE or something like that. I can't quite remember what the acronym was.
PSE, I think.
Something like that, yeah.
Yeah.
And essentially, it was like learning about internet safety, and it was like these real life application lessons. And I feel like you definitely need to have that in primary school and those specific ones at that age. But I think as you go into secondary school, and I suppose even sixth form college or whatever it might be, I think at that point, that is when these lessons, they shouldn't just be cut out of the system completely. I think at that point, they should be still implemented, just adjusted to the age. And I think at that point, you are more suited to be learning about finances. And I think those are the real life lessons that matter. Because I mean, I can't tell you how many times I've been on TikTok or YouTube Shorts or Instagram and seen someone saying, "When was the last time I used Pythagoras theorem?" or something like that. And it's just like in our job we don't use it, right? But we spent years and years learning it, and it's one of those where you think to yourself, "Oh, is it a bit silly that these real life lessons aren't being taught?" And I mean, the article does a great job of highlighting the benefits that it could bring. So it seems it's like you said, Tom. It's incredibly frustrating to see the potential that it has, and just to see that nothing's being done. And I, the only thing else really to say is that we can only hope that it does get implemented soon.
Yeah, absolutely. And as you said, especially in fintech and finance, we see so much evolution and so much fast paced change. But the education system, we're still learning about the exact same curriculum that was set God knows how many years ago. I don't even want to know, frankly, how long ago.
But also, you've got to think about stuff like financial apps that weren't about 20 years ago or whatever it might be. I mean, think about the evolution of buy now, pay later. I remember when I first joined them and I was joined the Fintech Times and was writing about BNPL. It was just about how many young people were finding themselves in debt because it's so accessible and seems so easy to use that there's just no management about it. I mean, stuff like that. The younger generations coming through, they're more, they have access to these apps. Like it's crazy. It's almost a bit. It is ludicrous how accessible they are for people who don't know what they're doing, and I think that is really why these sort of lessons are needed now more than ever.
No, absolutely. I think that's why we're hoping that this kind of roundtable can be the trigger we need to really see some kind of change in financial education.
Yeah, love that. Amazing stuff. Francis, why don't you go next? Take us to some crypto.
Yeah, absolutely. Cheers, Polly. So this month seems to have been a very big month for the crypto marketing world. At the start of the month, we had the FCA in the UK announcing new crypto marketing rules to improve consumer safety. And now the Hong Kong Monetary Authority has seemed to follow in a similar suit, warning crypto firms against using banking terminology to protect consumers and improve transparency. So, for the longest time, I think it's fair to say that crypto exchanges and crypto firms have been establishing themselves in the financial world using terms like your crypto bank, or you can deposit money with us, or stuff along those lines, savings plans. But for those that don't really understand cryptos and how volatile they really are, I mean, when you're putting down money into a crypto, it isn't really a deposit, it's a gamble. I mean, it fluctuates so much that there's no guarantee that you're going to be making money off it. And I mean, this is something that some crypto firms have in fact said, according to the Hong Kong Monetary Authority, is that they said that some firms are claiming that you're guaranteed to make money, and it almost seems like a get rich quick scheme, and it's just a bit suspect, I think, to say the least. And so crypto firms describing themselves or their products in using banking terminology are in fact in violation of the banking ordinance in the country. And the regulator has now sort of stated, making references to different sections in the ordinance, that without a license, these companies could face big consequences, essentially. So yeah, in fact, the regulator has made references to various sections within the ordinance, reinforcing the fact that businesses without the license can't take advantage or encourage deposits from their consumers, as the consumers aren't covered by the Hong Kong Deposit Protection Scheme from companies that aren't a part of or who don't have the ordinance. So what I really wanted to discuss with you guys really is it's a question of trust, right? Because what I found quite interesting is that many crypto firms are now finding themselves in a catch-22 because the very nature of cryptocurrencies, as I mentioned, is extremely volatile, which can cause concern for investors. And I mean, especially when you think about the horror stories of FTX and Terra Luna crashes. I mean, I remember seeing Reddit stories of people saying that they'd put their entire life savings and they didn't know what to do with themselves because they'd lost everything. And I think legitimate crypto firms who are trying to establish an honest reputation may have used banking terminology as a way to sort of combat this negative press by sort of associating themselves with something that is trustworthy, which is understandable. But at the same time, now that they're being told they can't do that, it's almost more negative press, and they're finding themselves having to climb a bigger mountain, essentially, or there's an even bigger mountain to climb, I should say, to gain consumer trust, just because of how many or how difficult it really is for them to establish this trustworthy nature against all the negative press. So I wanted to talk to you guys really to see, what do you think about these new regulations? Are they necessary? I mean, some of the experts we spoke to say that there should be exclusive crypto terminology as a form of creating trust within itself, like establishing its own trustworthy words, I suppose, the positive connotations. So yeah, I wanted to get your guys' thoughts. Tom, I'll go to you first.
Yeah, at risk of sounding like a broken record, once again, it's kind of a bit like I'm hearing about this story and reading it and just thinking about how we see in this sort of crypto technology advance and evolve, and we're seeing more and more crypto firms emerge and advertise themselves, and the regulations just haven't kept up. And this is quite a simple thing. It's just you're not allowed to use these sort of banking terminologies, and it almost feels like something that should have been there from the start. You're not allowed to mislead your customers, essentially, is what this is saying. So I think it's quite an interesting topic that, again, we're talking about this when it seems like quite a something to me that seems like it should be quite baseline, like something that should have existed as soon as crypto kind of emerged as a, yeah, if you're a crypto firm, you're not a banking firm, you can't use these banking terminologies. It seems like quite a slow process that this kind of thing is only happening now, and it's happening after crypto firms have been, I guess, freely using these terms in Hong Kong. So I think it's again a shame that regulation just doesn't seem to catch up with this type of area. But regarding how crypto firms can get trust, I think it's just through establishing themselves for a long time and not being, we see so many negative sort of press surrounding crypto, and maybe, like you said, having terms that crypto firms can only use themselves, and other firms like banking firms might not be able to use the crypto terminology to kind of differentiate and show and highlight what crypto is offering that banking isn't. That might be an interesting topic. But again, how long until we could actually see that come into play with how slow regulations seems to be moving? I'm not sure. So I think the most important thing is that these crypto firms just ensure that they're not misleading their customers and they're not using terminology that could be confusing for consumers who haven't received a little callback to a good financial education. They're not aware of the differences. So, they could be confused into thinking that crypto firms are a banking account or a quick get rich quick scheme, which in reality they never are. So I think it's just an interesting space to look at, because we know what should be happening and what firms should and shouldn't be doing in terms of misleading their customers, but just all the regulation takes far too long to catch up at the moment.
Yeah, definitely. And I think an interesting point is Coinbase. I mean, one of the biggest crypto exchanges that exists, really. I remember a few months ago at the start, well, to be honest, it was more than a few months now. It was at the start of the year. It was in January. They were facing a lawsuit for claiming to have bank grade security, and then some of their consumers got hacked and lost hundreds of thousands of their investment, I suppose. And I think that is where this call on security really matters, is when you think about telling your consumers, we have the same level of protection as these established conglomerates, I suppose, like your Barclays, your Lloyds, your high street banks, who for the most part can keep their funds incredibly safe from hacks and from external, from everything, really. I mean, theoretically, at least. I mean, obviously that's not the case all the time, but more often than not, you can trust your bank to look after your money. However, telling your consumers that you can do that when you simply can't, I think that is where these sort of rules about really changing the terminology used in crypto marketing really makes a difference. And I mean, like I said, we've seen the FCA make these changes. And now we're seeing the HKMA also making it. And I think it's really just going to sort of have a domino effect. I think it's only a matter of time, really. I mean, the US will be an interesting one to see when that really happens, because I mean, there's so many things happening in the US and so many crypto exchanges threatening to leave or move their HQ out of the country due to the pressing regulation. So I think that will definitely be an interesting space to keep an eye on. But for the time being, yeah, I think there is this question of trust, and I don't know. Yeah, Polly, what do you think?
Yeah, I mean, there's not too much I can add that you guys haven't already very succinctly covered. But I think for me, it comes back to what Tom just said there, that you can't mislead your customers. And I think that's kind of the only thing you need to say when it comes to this topic. You can't mislead your customers. And that's exactly what these companies are doing, whether intentional or not. I know you can't necessarily prove that people will be doing it on like purpose or anything like that. But at the end of the day, using terminology that has certain connotations to it is very misleading, and that's not a way to build consumer trust and customer loyalty. And as we know from what we've talked about previously, those two things are like the most important thing when it comes to having a consumer-led business. You have to have their trust and you have to have their loyalty. If you don't have either of those things, then you're not really doing it right. And I think as someone who doesn't understand crypto at all, I can see how people would fall into a little bit of a trap with these terms and to not understand and things. And like you guys were saying, with the regulation taking so long to catch up, it's really not great. And I know the appeal of crypto is that it's volatile, and so that you can get some big returns, but then you can also get those big losses. So I think, yeah, it's just one of those really sticky situations where crypto is just such a big beast. And if you know what you're doing, you can get the big returns back and you can have a lot of fun with it and enjoy it as like an investment. But if you don't know what you're doing, and if the companies themselves aren't even being transparent, then you've kind of got no hope. And that's when you end up in the situations of having no money left, your life savings are gone, or things like that. So it's really interesting. And yeah, I do think there should be the unique exclusive terms. I mean, we already have that, like crypto wallets, that's one, and all sort of similar things like that. So yeah, I think the expectation from consumers needs to be there to actually be able to know what they're getting into. And I think the companies, brands, exchanges, whatever you want to call them, the crypto side of things, they really need to get on it and actually prove that they're worth the trust that the consumers put into them, I think.
Yeah, definitely. I think the only thing that I will say before we move on, really, unless you guys have something else to add after, is that I do kind of understand why some firms may have chosen to use the terminology. Because, I mean, when you think about things like FTX, like Terra Luna, or even perhaps, Coinbase, where you hear these stories of organizations that have failed to really do the crypto world justice and have really given it a bad reputation. And as an honest sort of organization, I can understand why they might try and associate themselves if they mean well from the start. I mean, maybe this is just me sort of saying that, a world too good to be true, where every organization is honest and doesn't have their own sort of, means at heart and stuff like that. But I think there really is that I can understand essentially what I'm trying to say. I can understand why an organization might try and use the terminology. I mean, it really is a catch-22 in my opinion. Like, if you want to be trustworthy, you kind of have to use those terms rather than the crypto ones because of the bad reputation that they have. But then by using those terms, you're going to get a bad reputation. So either way, it's a lose-lose, it seems. But yeah, I mean, I think that at the end of the day, the regulations themselves are incredibly important and very good. So yeah, no, I think it'll be interesting to see how they adjust, the firms, that is.
Yeah, absolutely. Moving on then very briefly to my news story. So we're moving to banks now, and how UK banks are inherently misaligned with customer needs as saving interest rates remain stagnant. So obviously the interest rates hikes are a very hot topic at the moment. That literally on the day of recording, I believe there's been some news from the Bank of England, and the interest rate now stands at 5.25%. with mortgage and loan interest rates risen accordingly. Banks obviously have been very slow to up their savings account rates to the same degree, if at all. And the smart money app Plum is now urging banks to put an end to this profiteering and pass the interest back to the savers. So obviously this is a very hot topic at the moment with all the interest rates and everything going on, and also with like the cost of living crisis and things like that. Everyone wants to get the most out of their money, but savings interest rates have come to pretty much a standstill. And plumbers found that the average British person is receiving 3.3% interest rates, which is 1.95% under the base rate. So on average, UK customers are missing out on £478 of interest per year, which equates to £17 billion across all savers in the UK, which is a lot of money. And obviously, people aren't so thrilled about that. And with banks being quick to increase the interest rates on loans and mortgages, they've been very falling behind in boosting the interest rates on saving account, which isn't great. And obviously, it's very disappointing that to see banks not passing on this money back onto customers, especially with the FCA action, back in July, they set out a 14-point plan to ensure banks and building societies pass on the interest rates to savers, but hasn't really had too much of an effect just yet, as many interest rates on saving accounts are still just very stagnant and not moving anywhere. So I'd love to get your guys' thoughts on this. Obviously, big topic right now, especially with the news today. What do you think about savings accounts? Are banks being typical banks and kind of like leaving all the money to themselves, or is it just kind of the state of the economy at the moment that it's a really difficult situation for everyone with the interest rates rising the way that they are? What do you guys think, Francis?
I think it's funny that in my article I was saying, oh yeah, you can trust banks. They got your back, and now we're seeing that no, they don't. They're just here trying to keep money for themselves. Yeah, I think it's a real shame, and it is again just frustrating to sort of see that it's almost profiteering on an awful situation that the whole UK is been facing. And I mean, £17 billion across all UK savers is crazy amounts of money, and it just sort of goes to show that. I mean, even if you look at it on an individual basis, 478 pounds, sorry, I should say, per year is a lot of money, and I mean that can really go a long way to help a lot of people. And I mean, there are so many people that have sort of they're not even they are struggling to get the basics, to survive. I mean, having to maybe skip meals because they can't afford it and stuff like that. It's crazy to think that that sort of stuff is happening. And supposedly financial firms and banks who always go on about how they care about their consumers, how they've always put the consumer first and all that. And yet they're leaving them out to dry to really suffer this difficult year that has really been a challenge for a lot of people. So, I mean, now that the interest rate hikes, it's not gone up again, which I guess is a positive, right? I mean, it wasn't the 15th consecutive hike, which is a good thing, but I think it's going to take a while before they really drop down again. And I mean, I think banks would be the first to really drop their interest rates, right? I think they'll be the last to up them to give people more money back, but they'll be the first to cut them to ensure they don't need to give people as much money. So I think it is I don't think there's really a solution to it other than to say it's just unfortunate that this is really the way it is. I mean, maybe you could have more government action to really enforce banks to do more, but I think that's just wishful thinking.
Yeah, no, you're absolutely right. And I think, when you consider the Bank of England has raised rates 14 times since December 2021, that is crazy. And even though they've not risen today, it's going to take a while to get back to kind of where we were. What I do find interesting, obviously, is sort of thinking about Plum and their stance on this. They have said in a quote that they'll be offering a new service that better reflects base rate changes so consumer money can work harder. And you wonder if that means that fintechs will take advantage of this situation, with a lot of animosity is like a strong word, but with a lot of sort of ill feeling towards banks not raising interest rates where it sort of matters in terms of savings. Will the fintechs kind of emerge as a bit of a white knight in this scenario and offer better products and better services that do reflect these base rates. I think it'll be interesting to see how that affects the game. But Tom, what do you think?
I think, as you said, it's been such a long time since we saw the first increase. And from that point at the end of 2021 until now, it doesn't feel like we've had any increases. I think the whole time, practically, the average was around 3% for interest rates for savings accounts. And regardless of whether we see fintechs kind of enter in that space to try and offer closer to 5% saving accounts or saving interest rates, sorry, we're going to see the fact that UK consumers have still missed out on over a year of higher interest rates because banks have been too slow to adapt. And I think, speaking from like a consumer standpoint, I remember comparing that interest rates to different savings accounts across the UK when the interest rates were still seeing regular increases. And I realized that practically none of them had changed since I'd last checked 6 to 12 months before. And just the fact that the mortgage interest rates are seeing increases on the day. We see the basic interest rate goes up. That from that day onwards, you can't get a mortgage without seeing much higher interest rates. But over a year later, the savings rates haven't changed, and it's not a fact the banks can't afford it or they can't increase those rates. It's just they haven't been willing to. And as you said, the kind of FCA threats are there. Like, they need to prove that they're given a fair rate by the end of the year. But the fact that none of these rates are moving suggests to me that these kind of threats from the FCA aren't going to be enough of a push needed to see this sort of one supposed positive of the high base interest rates change. So I think it's an annoying space, and it's kind of, again, it's very slow moving. Banks aren't being punished, and the consumers are the ones paying for it. So it's a day of frustration for me, I think, of just slow moving regulations. But I think it's something to be aware of for the future, and I hope that we're going to see some higher interest rates, so we all have a few more pounds in our pockets as soon as possible.
Who knew that the theme for today's podcast was going to be slow? But no, it's interesting very quickly what you said about mortgages, because I was like, oh, let's have a giggle then. And I went to go have a look to see how much my current mortgage would cost me, which we took out in the beginning of 2021. So literally just before the interest rates started going up. That's when we took out our mortgage. And I had a look how much it would cost me this year, a couple of months ago. And it was like over twice as much, like monthly payments, which is like insane. So yeah, it's not great, but hopefully things will get better soon, but we'll find out. But anyway, guys, thank you so much for the discussion this week. It has been fantastic to talk about fintech with you. If you want to hear any more about the fintech world, any news, insights, and other lovely stuff, head on over to fintechtimes.com, where you can read more about the news stories that we've talked about today, as well as plenty of other things from the industry. But super quickly then, let's move on to what I learned this week. So each week, so much new news and information crosses our desks, being on the editorial team, that we are learning something new all the time. And we thought it'd be fun to share that with our listeners. So Francis, what did you learn this week?
This week I learned that HSBC is accepting international credit history, and considering the movement of credit history and trying to get new credit history after moving country is one of the biggest challenges that immigrants and face when they come to a new country. I think this is a great move by HSBC.
Amazing. And Tom, what have you learned this week?
I feel like this might be a bit of a cop-out given the discussion we just had, but this week, or today in fact, we all learned that the Bank of England left its interest rate unchanged in the UK instead of increasing it for a 15th consecutive time, which will hopefully signal a deceleration of future price increases.
Lovely stuff. And then what I learned this week is that banking employees are the happiest in the UK, and employees working in banking have the highest level of job satisfaction, which is crazy to me because I thought all bankers were really stressed and unhappy, because that's what they are on TV. So love that for bankers. But anyway, thank you guys so much once again for joining me on this podcast. It has been lovely to finally get back on and chat about fintech together. So yeah, catch you on the next one.
See you guys next week.
See you next time.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views, and follow us at the Fintech Times.